a SWIFT thing says I can't use a communication to do business with you. I can still do business with you. And there are a lot of workarounds on SWIFT.
We cannot exclude that Russia will take retaliatory steps that will impact energy trade.
It was very clear from the West, energy was off limits.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The fighting in Ukraine escalates despite ceasefire talks. The city of Kharkiv continues to suffer heavy shelling. The military aggression drives 500,000 Ukrainians to flee the country, according to the UN. Poland says it received nearly 400,000 refugees. And Putin pushes back on sanctions. Moscow hardens capital controls and shuts Russian airspace. Jamie Dimon tells Bloomberg the SWIFT sanctions may have unintended consequences. We'll stay with Bloomberg Surveillance Early Edition this hour. We also speak to the chair of Ukraine's largest commercial bank, PrivatBank's Sharon Easky. Send in your questions on IB Plus TV Go. You can also tweet me directly. Now, this is a check on the markets. I have to say there is a bit of surprise from certain parts of the markets that actually the cooler headers, the cool heads prevail, given the heavy bombing and the linkage between some of these pretty horrible videos that we're seeing and the resolve of the West to maybe impose more sanctions or even cut off energy prices. Our Javier Blas, if you follow him, he's from our Bloomberg Opinion expert on energy, is really excellent on this. European stocks down some 0.4%. It's really travel and leisure that are losing the most. The next one is auto and auto parts, and they're only down some 0.5%. Now, this has to do with Russia closing, of course, its air space, but also it has to do with the price of oil and the price of gas and jet fuel going up after already this sector suffered immensely because of the pandemic. Crude oil currently at 101. We're looking at possible reserve strategies being released, and then Russian ruble 98.65. We've seen a lot of whipsawing over the last couple of days, but then the stabilization of the Russian ruble. But we still need to understand exactly how the sanctions work. In certain cases, a lot of the big banks are trying to weed their way on how to further isolate, Russia and how to go ahead that delinkage. Now, you can see the FTSE gaining some 0.2%, but the DAX, of course, much more dependent on energy coming from Russia, and also closer geographically is down some 1%. The CAC 40 down 0.7%. A couple of things have happened in the last hour, including Maersk saying they will temporarily suspend shipments to Russia. So we'll see any impact on trade there. Now, heavy fighting continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. This as talks to secure a ceasefire and without agreement, while civilians continue to flee the fighting for safety in neighboring countries. EU ministers will be holding an emergency meeting later on the growing refugee crisis on its borders with Ukraine. Now, President Putin has hit back with countermeasures in response to punishing Western sanctions, and Russia has banned its residents from transferring hard currency abroad and blocked payments on external debt. Now, we're joined by Bloomberg's Christina Kino on the latest market reaction. Also, Andrew Pease, Global Head of Investment Strategy at Russell Investments. So thank you both for joining us. Andrew, first of all, the market seems to be taking now in their strides. To me, first of all, you don't know if the sanctions will go further as we hear and see some of these horrific images. And actually, have we really figured out how you freeze out the 11th biggest economy in the world without damaging yourself?
That's right. So far, it looks like it's going to be isolated to Ukraine, and the linkages to the broader economy aren't clear. Of course, the big risks are a broader NATO attack by Russia, which seems extraordinarily unlikely. The second one is energy, and the third one is cyber. So I think there are some tail risks there that have some big implications, but in general, markets are still trying to work out what's going to happen next, whether those tail risks evolve. And while that happens, they're going to be cautious, but ultimately, this probably doesn't have a lot of spillover effects to the global economy.
So, Christine, what are markets watching next as the invasion continues?
Well, Francine, I think markets are very much focused, again, on Russian corporates and the government itself's ability to service its debt. We did get those developments overnight from Russia banning its residents and its companies from sending foreign currency abroad. Now, that only applies to new loans, not existing debt. And so, in theory, they will still be able to do that. But operationally, there's a whole big question mark over the fact that they're locked out of the SWIFT messaging system. How are they even going to do this operationally.
Yeah, so Andrew, when you look at some of your portfolio insights, again, operationally, we don't really know how the sanctions will, the secondary effect of some of these sanctions or SWIFT. Are you comfortable, or day 3 of the sanctions, are you comfortable that there's not a systemic risk or something that actually makes you revisit where you should have your money?
Well, obviously, there's a lot of discussions happening across all asset management firms about what the implications will be on this. And as of right now, and at Russell, we talked to a lot of the managers that we use, and we're getting a lot of feedback from them. And we're reasonably comfortable with the position that we're in and the risks that we're seeing. So, yes, there's a lot to monitor, a lot that's being observed very, very carefully. But right now, we're not seeing anything that's too disruptive in terms of the main asset classes that we're watching.
Christine, how vulnerable are the European markets to any more retaliation from Russia?
Well, Francine, very. I think there's various ways in which Russia can retaliate that could really harm Europe. The first one probably is via, of course, the energy attraction. Again, Russia is the biggest supplier of gas to Europe, right, and energy. And already we're grappling with an energy crisis here. And so adding this additional risk to that, the potential of gas being completely cut off from Russia, is really going to just raise the anxiety levels of markets around this idea. And then, of course, the potential second round effects of that via the company exposures, for instance. We know that Europe is very much a energy heavy sort of a market. And so any implications from that could potentially be a negative for some of these energy stocks.
Yeah, and in terms of specific energy stocks, I mean, we saw, of course, BP, we saw Shell get out of Russia, and there's a lot more pressure on Total of France and Exxon of the US to do the same. Andrew, what does that mean for some of the sectors that you like or dislike at the moment?
Well, we have liked for a long time heading into this year the rotation out of growth stocks and into value cyclicals, and certainly Europe having an overweight to value cyclicals had been a place that we'd liked, and certainly that's come under pressure from what we're seeing in Ukraine right now, and there has been a little bit of a resurgence, maybe back to growth. So I'd still say that once we get through the next few weeks, maybe the next month, and things start to clear a little bit, that rotation will still take place. But certainly it's been tough for sectors, particularly over the last week, like financials, which had been certainly one of the value cyclical plays. On the other side, though, heading into this environment, some of those growth managers that had looked quite expensive heading into now are starting to show a bit more value. Yeah. So there are opportunities out there, and I think that will become clear over the next month or so.
Andrew, I've heard it from both sides. Either the West or actually Europe decides not to buy Russian gas and oil, or, as Christine was saying, a possibility of things ratcheting up as Russia says, right, that's it, I'm turning off the taps. I mean, how do we deal with that?
Well, I think the first thing is, I'm much more comfortable, it's a terrible situation, of course, but from a market perspective, it's more comforting that it's happening in February rather than in October. So heading into the northern spring is a little bit easier. But it's unlikely, it's not impossible, but unlikely that it escalates. And we've seen the carve-out so far in the sanctions certainly have excluded energy companies and companies involved with energy financing. And if that was to change, that would be certainly a significant escalation on the part of the West. So I think it's a major watch point, but on balance, it does seem unlikely that it will extend to actually threatening Europe gas supplies. And to be clear, Russia needs the revenues from gas sales as well, so there is a bit of codependency there. So that would be a major escalation.
Let's also look at some of the European banks. Our Valerie actually did a great chart on this, looking at the pressure on some of the banks. And Christine, you were explaining again the extraction, of some of these large banks. And we saw at Citigroup, I think, saying the exposure is $9 billion, is not as easy in terms of how this will play out over the next couple of days.
Absolutely, Francine. I think it's going to be an incredibly complicated process for these businesses to actually extricate themselves and expunge themselves from that Russia exposure. Just because over the last few years, the international system really has gotten very, very tied together. And so, now that they're trying to figure out this process, well and good that they're indicating this, but really the question is the mechanics of it all. And I think that's what investors are really trying to figure out at the moment, and hence quite a bit of confusion out there in the markets.
Thank you both for joining us. Bloomberg's Christina Aquino, our markets editor, and Andrew Pease, global head of investment strategy at Russell Investments, stays with us. And of course, imagine one of the key questions is also, are Russian markets now uninvestable? We'll talk a little bit about that later. Now, smart conversations continue on Bloomberg Surveillance Early Edition. This hour, we also speak to the chair of Ukraine's largest commercial bank. PrivatBank's Sharon Easky joins us later this hour. Up next, we speak to the chief financial officer of Covestro after announcing a €500 million share buyback. Send in your questions on IB plus TV Go. This is Bloomberg.
Of course, the Moscow Stock Exchange is closed. It closed on Monday. It's going to be closed until March the 5th. So Russia, Belarus is uninvestable, clearly, at this point. It's not a time to panic. It's a time for calm heads, of course. And what we're seeing in the market is there's a flight to quality. There's actually a flight to scarcity. Think about energy. Think about food supplies.
Well, that was the chief executive of Aberdeen, Stephen Bird, saying that Russia is uninvestable. Later in the program, we'll be delving into the ongoing corporate exodus from Russia. And if you have any questions for us or any of our guests, just IB plus TV Go. You can also reach out on Twitter. Now, Covestro announces a €500 million share buyback. This as fourth quarter sales rise on higher prices. Well, Covestro's CFO, Thomas Töpfer, joins us. Mr. Töpfer, thank you so much for joining us. This is a German company, of course, which produces some of the polyethylene foams or some of the also high-performance plastic polycarbonates coatings and things like that. So you're extremely affected, Mr. Töpfer, by the price of oil and gas. How has the Russian invasion of Ukraine affected Covestro?
Yes, thank you very much for having us in the program. So let me first of all say 2021, and then I will talk about the current situation. But 2021 for us was a very successful year, and we've been virtually sold out over the entire year. And you've seen we were able to increase our sales by 50%. And the reason is because we were able to pass on energy prices already in the past year to our customers. And now to the situation in Ukraine, of course, we've carefully analyzed the situation. And the fact is, first of all, we're doing very little business in Ukraine, and we're doing virtually no business in Russia with significant...
But Mr. Töpfer, I mean, the question was really on oil prices, because I understand it's important to also look back. But I imagine your world and actually the cost prices and the cost pressures for 2022 have changed for the foreseeable future.
Absolutely. And I was just going to come to that. So the immediate impact is low, but also the impact that we're seeing in the markets, and you alluded to that, we think can be mitigated, because currently we see that the markets were very volatile end of last week. That has normalized to some extent over the last couple of days. So we do think, yes, there will be an increase in prices in oil and also in energy, but it will most likely be something that will affect the entire industry. And we've proven in 2021, and this was why I was talking about the experience that we've made in that year, we as a company were able to pass that on to our customers and successfully maintain our profitability, simply because the demand for our products is so vital and so critical that this is something that we were able to generate. And we're expecting also that this will be the case for 2022.
So you think at this point, and actually my first question is, how much of your overall costs or production costs are coming from energy at the moment?
Well, we have roughly $1 billion in energy costs. If you compare that to the total bill of raw materials that we have, that is in excess of $10 billion. That shows you that is about 10% of our input costs comes from energy. We've seen a significant increase in energy prices from roughly $500 million in 2020 to roughly $1 billion in 2021, so a doubling. But still, as I said, our results have also doubled because we were able to pass on those bills. And we are expecting that this number from the $1 billion of last year could go to as much as $1.5 billion in 2022, exactly because of the effects that you mentioned. Of course, the current geopolitical situation is putting pressure on prices.
And there is no doubt that you're able to actually pass on some of these consumers. I mean, we worry about inflation. How much are you expecting then your products to go up by?
Well, I mean, the prices for our products are really driven by supply and demand, and they have increased by more than 50% over the last year because of the demand for things like electric vehicles, for building insulation. The energy itself is not the biggest driver for the prices in our products. It is essentially something that, especially for the commoditized products, it is a a price adjustment factor in our contracts. So it is, as I said, energy is not the biggest input factors for us as a company.
All right, thank you so much for joining us. Thomas Töpfer, there, the Chief Financial Officer at Covestro. Now, we're seeing a lot more pressure, of course, politically, but also these self-sanctions morally from a lot of energy companies deciding to get out of Russia. We saw it with BP. They were the first ones. We saw it with Shell. Now, TotalEnergies say they will send fuel to Ukrainian authorities and they will no longer provide capital for new projects in Russia. Now, this is not exactly what some of the investors were expecting, which is actually saying we will no longer do business in Russia. But it's, of course, a step in that direction, with Total saying they will no longer provide capital for new projects in Russia. At the same time, a lot of pressure is also mounting on Exxon, that also has very strong ties to Russia. Brent crude extends gain at the moment, rising as much as 3.8% in London. The focus will be on some of these strategic reserve releases and what that has as an impact longer and shorter term. Coming up, the chair of PrivatBank, Ukraine's largest commercial bank, Sharon Easky. She joins us for her insights into the challenges facing Ukraine. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at the corporates' reaction to the Ukraine invasion with our Danny Berger. Danny, what are you looking at today?
Francine, is this wave of self-sanctions we're seeing companies undergo? For many Western companies, they've decided they don't want to take either the reputational risk or the financial risk that comes along with doing operations in Russia. It's really a wide breadth of different industries. Oil and gas has been very closely watched. BP was one of the first to announce on Sunday that it would be getting rid of its stake in Rosneft. Shell also cutting back on its exposure as well. We heard from Maersk just an hour or so ago saying that they wouldn't be taking new bookings in Russia, concerned about safety as well as the financial impact. You have car dealers as well on the list, car makers rather. And again, a lot of it is how do you even do business with banks cut off from SWIFT? Does the freezing of finances and the flow of financial assets also mean the freezing and flow of goods? So let me show you what some of the stocks are doing today. So along with Maersk, another company that announced a change in policy towards Russia was Total. So Total down 1%. They do have a stake in one of Russia's largest independent gas providers. They haven't announced anything on that, but they said they wouldn't be funding new projects in Russia. Will they get rid of that stake, that JV? How big of a hit will they have to take on it? That's something we've contemplated with Shell and BP as well, both of those declining, erasing earlier gains. And I would say, Francine, the other sector to watch is banking as well. We've had a number of banks announce that they wouldn't be financing funding of oil and gas and other commodities coming in and out of Russia. And again, there's the wider impact of if you have missed payments from Russia, does that have an issue when it comes to funding stress for banks?
Yeah, I mean, so much, of course, crossovers, Danny, and the implications that still need to be played out. Our Danny Berger there with some of the energy stocks and a great roundup, of course, of some of the other things that we're watching. We're back with Andrew Pease, Global Head of Investment Strategy at Russell Investments. Andrew, did you have any exposure to Russia? Is Russia now completely uninvestable?
Well, Russia's going to have some challenges. Its economy is isolated. It's going to take a hit. They've got the risk of social unrest, but we do have some exposure. We're a broad asset manager. We have emerging markets exposure, and we continue to discuss with our sub-advisors there. And I don't think there's a clear consensus yet on what to do with Russian exposure. And given that the market's down nearly around about 50% since the conflict happened, people are very much in wait-and-see mode. And I don't think really many people predicted the extent of this. This time last week, the consensus was that it would be a limited invasion of northern Ukraine. And this fuller invasion, I think, has really got people just waiting to see what happens and waiting until the fog starts to clear before making any really solid decisions about what to do with allocations.
Yeah, but Andrew, and we have some actually great charts, and we also have the Gazprom depository receipt dropping some 25% in London. I mean, some of the great charts look at, the credits longer term and some of the implications there for Russia. I mean, Russian borrowers, of course, will need to figure out how they're going to pay about $9 billion over the next 3 months. Again, can this be contained?
Well, I think I think the central scenario is that it can be contained. Like Russia as an investment market as part of MSCI World is not that large. So overall, the implications, there are some knock-on effects. We're seeing some concerns about financials. And I think what everyone is worried about and what I tend to be worried about is the tail risk, because in this event, the tails have high impact, but the tails are still low probability. And the tails, of course, are a broader conflict that involves a NATO country, which would be a worst case, almost impossible to contemplate scenario. And the other one is that energy gets affected directly, and that would certainly, we see oil prices and gas prices really spike much higher, and they're the really two serious scenarios. So the tails, high impact, but still at this stage look reasonably unlikely.
Andrew, thank you so much, as always. Andrew Pieser, Global Head of Investment Strategy at Russell Investments. Just as a reminder, and size and scope, Russell Investment has about £245 billion in assets under management, so not a small player. Coming up, what's it like on the ground for Ukraine's bank customers? We'll be joined by the chair of PrivatBank, Ukraine's largest commercial bank. She's Sharon Easky. Send in your questions on IB plus TV Go. This is Bloomberg. Now, the fighting in Ukraine escalates despite ceasefire talks. The city of Kharkiv continues to suffer heavy shelling. The military aggression drives 500,000 Ukrainians to flee the country, according to the UN. Poland says it's received nearly 400,000 refugees. And Putin pushes back on sanctions while Moscow hardens capital controls and shuts Russian airspace. Jamie Dimon tells Bloomberg the swift sanction may have unintended consequences. Also, stay with Bloomberg Surveillance Early Edition. This hour, we speak to the chair of Ukraine's largest commercial bank, PrivatBank's Sharon Easky. Send in your questions on IB plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what the markets are doing. We're seeing a little bit of pressure across the board in some of the currencies, certainly not the haven bid that we saw over the last couple of days. The impact, of course, on sanctions further escalating is something that a lot of the markets are trying to watch out for. European stocks declining, apart from, I think, the FTSE, which is gaining some 0.2%, bonds gaining. Again, Ukraine fighting is intensifying, and the world is now asking whether there will be more penalties against Russia. The ruble stabilizing efforts, worst plunge on record on Monday, though the wide indicative bid-ask spread highlighted ongoing challenges. Also, we have some of the Russian stocks that we need to talk about that are in London. Because the market is closed in Russia, we have to look at what exactly is happening here in London. Spurbank, of course, down some 13%. I think when it opened in the depository receipt, it was down 25%. Gazprom down also a fifth of 8%. Now, heavy fighting is continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. Now, this as talks to secure a ceasefire and without agreement. Civilians continue to flee the fighting for safety in neighboring countries. EU ministers will be holding an emergency meeting later on in the growing refugee crisis on the borders with Ukraine. Now, President Putin has hit back with countermeasures in response to punishing Western sanctions. Russia has banned its residents from transferring hard currency abroad and blocked payments on external debt. Oil prices pushing higher as investors try to figure out the possible impact of a reported release of strategic crude reserves by the U.S. and its allies.
The energy trade is going to be disrupted. This is not going to be a smooth thing.
This is an enormous amount of oil that has the potential to be disrupted for potentially weeks.
If you start using the SBR early in the multi-year deficit, is shooting yourself in the foot. You need to keep that for the right reasons.
We've done that before. It really didn't make a huge impact, I think, over the long haul.
There's room, if needed, to put sanctions on Russian oil exports.
I think you're going to see, in effect, a sanction on Russian energy just by the behavior of market actors.
We'll probably lose 3 million barrels a day of supply. This is an amount that the world can afford to lose to some extent.
Well, the JP Morgan chief executive, Jamie Dimon, also says there are ways around sanctions involving the SWIFT messaging system. He spoke exclusively to Bloomberg's Ed Hammond.
I'm going to defer American foreign policy to the American government. They're very smart. They've got a lot of experts in national security and economic policy, and hopefully they're doing the right things to bring it to a conclusion quickly. And also, my heart goes out for the Ukrainians. I mean, this is a humanitarian crisis for them. We're announcing later today some of the stuff we're going to try to do help there, and hopefully more to come.
And just talk to me quickly about SWIFT and what that means for the global banking industry, if indeed these sanctions that have been proposed are followed through.
So there's a little misinformation today. The government's going to decide how to use sanctions, how to use SWIFT. I don't want to bore your users. A sanction says I cannot do business with you. A SWIFT thing says I can't use a communication to do business with you. I can still do business with you. And there are a lot of workarounds on SWIFT, so they're different tools, they're used for different reasons. And the banks are talking to the government so everyone understands the issues, not because they're for or against any particular thing.
On the question
but these war doesn't always follow the path you want. Financial sanctions don't always follow the path you want, so people should be very thoughtful how they go about these things.
But the question of workarounds to SWIFT is a very important one, because that seems to be a concern, that if an alternative system is established and begins to get traction, that can present real risks to the sort of financial stability of the West.
Well, but remember, they can just stop us from doing it by telling us. A sanction is very targeted, very specific, very clean, and depending on how you apply it, you can apply that in multiple ways that you can't get around. There's no workaround in that kind of sanction, nor should there be. I'm an American patriot, and we're going to do what the American government tells us to do, and so I think people worried, I think they're more worried about SWIFT about the unintended consequences. What countries do you hurt? What people are going to do workarounds? How you fix that in the case you shouldn't. Remember, the government itself wants to have an open conduit, it looks like, for energy payments. So there are a whole bunch of issues they got to work through.
That was JP Morgan Chief Executive Jamie Dimon speaking exclusively to Bloomberg's Ed Hammond on Russian sanctions and the SWIFT messaging system. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Russia has barred airlines from the EU, Canada and other countries from its airspace in response to sanctions imposed for its invasion of Ukraine. Russia is a key route for travel between Europe and Asia, but it's now off limits for major carriers, including Air France and Lufthansa. Several airlines had already begun going around Russia or removing some flights from their schedules. Now Moscow has barred Russian residents from transferring hard currency abroad. The Bank of Russia later clarified the ban on providing FX loans to non-residents only affects new debt and doesn't impact servicing of existing loans. The Swiss government has broken with a long-held tradition of neutrality and agreed to enforce EU sanctions against Russian companies and individuals. The government's decision came after criticism by opposition politicians and editorials in leading Swiss papers, as well as by other governments. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, more on the war in Ukraine. As shelling continues, Putin announces countermeasures in response to crippling Western sanctions. We'll have plenty more on that. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we have a headline that's crossing the Bloomberg terminal from IFX, the Russian national agency, saying Russia says it will continue the Ukraine operation until its goals are met. Now, this is a pretty horrible headline that no one really wanted to see, of course, as more aggression and some of these horrific pictures are coming up also on social media feeds. It will be up to world leaders to see how much harder they want to go on Russia and whether there's any deterrent possibility because of what we've seen in the last couple of days. Now, PrivatBank is Ukraine's largest commercial bank with approximately 20 million customers. Sharon Easky is a chair of the Supervisory Board, is an expert in problem bank restructuring. As part of the U.S. government's assistance to Ukraine, Sharon supported Ukraine's response to its 2014 financial crisis. Well, PrivatBank was nationalized in 2016, and Sharon took on the role of chair in 2019. and Sharon Easky joins us now. Sharon, first of all of our thoughts, of course, are with the people in Ukraine who probably don't have access to cash. Here, I mean, the images of the war-torn country are really quite incredible to watch in the 6th day of invasion from Russia. What's the banking system looking like in Ukraine right now? Are any of your branches open?
Well, thank you very much for having me. It is really important that we have this opportunity to share what is going on the ground in Ukraine. To your specific question, the financial system, the infrastructure is actually quite resilient. Throughout Ukraine, the banking system continues to operate where it can. Branches are open. There are many places under fire, under attack, where this is not possible, or branches that are in locations that are currently under the control of Russian troops. But every day, there is an assessment by the central bank with the banks throughout the country where money can be deployed, where branches can open safely. And truly, the bank staff is working around the clock to keep essential services operational.
And Sharon, this is extremely important, of course, because even in war zones, people need access to cash to be able to buy the necessities to either, travel as refugees or just feed their families. How long, given the aggression of Russia at the moment, how long are you expecting this to stay open and support the financial system?
Again, they're assessing this on a day-by-day basis. When I checked with our bank management yesterday, we have an update meeting every day. As of yesterday, our bank branches that were open had cash that they could distribute. So about 50% of our branches, 700 of our branches were open and operating yesterday. And to the extent possible, that will continue to happen. Let me say, too, that the banking system is working. People, of course, are able to use cards, credit cards, payment terminals, where you swipe your card. Vendors are able to take on electronic transactions, and those are continuing to get processed through the system.
We've seen, for example, some of the ministers asking for help from certain private individuals in the U.S., including Elon Musk, who was able to support with Starlink quite quickly. What does the banking system and what does your bank need now from Western powers or Western privates?
Well, the needs of the country are well known. The government has done a very good job articulating the needs in terms of the banking system. It is going to get more complicated as I understand that last night more bridges in Kiev were destroyed in order to prevent the Russian troops or tanks from coming in closer. And so, first of all, the military aid is essential. The humanitarian assistance I understand is being put together and coordinated to the best it can be. A lot of effort on the ground and through surrounding countries to get what they can into Ukraine. So I think that really just stepping up and understanding the urgency of the situation is really what's needed.
Sharon, any cyber attacks that you've been trying to fend off because of foreign operatives?
Yes. Sorry to talk over you, but you know that last week, Ukraine, some of the government agencies and many of the banks, including our bank, sustained one of the most massive cyber attacks in the history of Ukraine and maybe in the world. I'll just give you a sample that the number of financial transactions that we process in a minute is usually about 50,000. The attack was pushing faulty and fake transactions into the system in order to block legitimate work. It was 1 billion transactions a minute. So we were able to sustain that, and the cyber attacks since then have continued, but they're certainly not to that extent.
Sharon, how have you been communicating with people on the ground, including the government? How's morale?
The Ukrainians are just an amazing group of people. I've been there for 8 years now. Another important message, and I think there's some perception this isn't the case, is that Ukraine has a vision. It has had a vision since 2014 of being a free and independent country. It wants to be, and it has been becoming, a legitimate player in the world, in the global economy. They are committed. They are fighting for their freedom. They have begun fighting in 2014. Their resolve is unshakable. The number of people that are helping them on the ground and have been helping them is extraordinary, and we want them to know that we continue to stand for them and to do what we can to, in any way, to provide support. But morale is good. It's scary on the ground. They are in a very difficult, tragic situation. They are living the atrocities of war every day. We have, just like the soldiers, people are showing up at the banks. Delivering cash is dangerous. Opening branches is dangerous. Opening the trains is dangerous. But people are staying at it to keep the country going.
Sharon, thank you so much for your time today. Sharon Easky, there, chair of the Supervisory Board at Ukraine's largest bank, PrivatBank, joining us this morning. Now, of course, the financial implications of freezing out Russia and the sanctions not only have an impact on a lot of the companies that decide to step out of Russia, but of course on the path forward for central bank normalization. Traders now delaying bets on the ECB 25 basis point rate hike to 2023 from December. So they were thinking that there would be that kind of hike in December. That's now been pushed back by a couple of months. And of course, the main question is also, we hear from Raphael Bostic a little bit later on today at a virtual event, what that means for the possibility of a rate hike this month from the Fed. Now, heavy fighting is continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. This as talks to secure a ceasefire and without agreement. So as the war escalates, President Putin has hit back with countermeasures in response to punishing Western sanctions. In the past minutes, Russia media has also reported that Moscow will continue its Ukraine operation. Joining us now is our senior reporter, Mark Champion, who writes on international affairs and was in Ukraine shortly before the invasion. Bloomberg's Nick Comfort also covers European finance regulation, and we'll talk about SWIFT and some of the sanctions. So let's start with Mark. Mark, Russia continuing the intensity of their invasion despite the West's sanction. How much further does this escalate?
Well, rather than continuing, they're increasing the intensity. So this began as a somewhat logistically challenged operation for the Russians. And on top of that, on some faulty assumptions about the level of resistance they would receive. So their strategy was really fairly light in terms of the kinds of equipment and people they were using. They were trying to make lightning strikes into cities and so on. It didn't work. And now they are really upping the tactics, and they're using a lot more artillery, missile strikes in center of cities, and really trying to encircle them and really fight the way that the Russian army is used to fighting, which is first with a lot of artillery, and then they follow up.
Mark, what is the West, what's the West calculation? Will they escalate further sanctions towards Russia in the hope that they save Kiev?
Well, I think they've already sort of overperformed in terms of what people expected and what the Russians expected would be done in terms of sanctions. So there is some scope left, and that may come, but I don't expect it, immediately. No. Right now, for the Russians, I imagine the focus, at home is very much on the sanctions, but in Ukraine and for their campaign, it'll be about trying to get it done quickly enough before a lot of supplies of anti-tank weapons, anti-aircraft weapons, and so on start to make it into Ukraine, and to raise the cost for them of every city they try to take.
Nick, talk to us a little bit about the impact of the sanctions so far. So what do we know about the banks being cut off from SWIFT? Again, because this is a messaging system, there's always a workaround.
Yes, exactly. This is the Gmail of global banking, so to speak. So we know that at least 5 banks will be cut off from SWIFT. That's based on from the information from the U.S. Treasury. We don't have a full, really detailed list of sort of who exactly from the European Union who will be cut off, and that's very relevant for banks here, for companies, because they will want to know sort of how they can move money, and the European Union is key here because SWIFT is based in Belgium, means it's subject to the bloc's rules. But we do know, I mean, the 5 banks, Sberbank and BCB really stand out. They account for 50% of Russian banking assets. So they've gone after the big banks, certainly.
So what are the consequences for the Russian and global economy? And Nick, this could be escalated, or certainly the sanctions or the freezing off of SWIFT could apply to the whole Russian economy, not just these 5 sanctions banks. How bad would that be?
That would be very bad. But at the moment, the indications we have is that energy will be excluded. So payments for energy will still be possible. That means that Russian gas can still flow to Europe, Russian oil as well. And given the price rises we've seen, that's obviously a very sensitive topic for consumers here, but also in the United States. And it's the middle of the winter heating period. So exactly how that's going to be structured, that's going to be a really tough nut to crack, I'd say, for officials in Brussels and elsewhere. And then in terms of other companies, I mean, it's a huge blow because, I mean, if you want to be buying and paying for products and services, then you will be not be able to do so through the major banks. I mean, maybe there will be another bank that can take your transaction, but finding just the sheer doability of that at the moment will be very difficult because of the number of orders flooding through, but also the reticence of banks elsewhere in the world to deal with Russia.
All right, thank you both for joining us. Bloomberg's Nick Comfort and Mark Champion as well. Coming up, the Ukraine crisis has whipsawed oil prices, so could a release of crude reserves by the U.S. and its allies reduce the volatility? More on that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil prices pushing higher as investors try to figure out the possible impact of a reported release of strategic crude reserves by the U.S. and its allies. Now, traders say that Chinese companies are expected to scoop up discounted Russian oil should sanctions deter other buyers. Well, joining us now is our Bloomberg executive editor for commodities and energy, Will Kennedy. So how much of an impact do you think the release of strategic reserve is likely to have on the price of oil?
Aspect of it is already having oil, Francine. In the immediate aftermath of the invasion, we quickly went to $106 in the Brent benchmark, and we're back down at 100. And I think that reflects two things. One, the fact that the sanctions did carve out provisions for oil exports from Russia to continue, but also that traders do expect this action coordinated by the US through the International Energy Agency to release about 60 million barrels of oil at some point soon. And it's helping to keep a lid on prices.
Will, is China just going to buy more oil from Russia?
Well, that's a little unclear at the moment. I think in the last few days we've seen a fair amount of chaos in the actual physical oil markets where people buy and sell oil. It's been unclear. People were trying to work through what the sanctions mean exactly, because there are sanctions on a lot of the banks that are involved in commodities trading, and that process is still working through. But ultimately, I think there'll be a lot of buyers in the West that won't, and some of that China,
thank you so much.
Some of that oil.
Our Will Kennedy there.
I think we're all trying to figure out what's going on now, and it's very hard, if not impossible, to predict what Vladimir Putin's going to do.
I think that there was a sense in Moscow that this was going to be easier than it actually has been.
Putin, one of his major games was to break NATO, to weaken NATO. He's done just the opposite. He's brought it together.
Look to see more companies announce their exits from Russia in the coming days.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, March the 1st. Our top stories today. Russia steps up the shelling of key cities in Ukraine overnight. Meanwhile, ground troops are closing in on the Ukrainian capital, Kyiv. President Biden will highlight the bravery of Ukrainian defenders in the State of the Union address tonight. He'll also stress the importance of the U.S. as a global leader. And companies from Shell to Daimler are pulling out of Russia. That reverses 3 decades of investment that began with the collapse of the Soviet Union in 1991. Welcome to Bloomberg Surveillance, everybody. This is the early edition. I'm Anna Edwards in London, Matt Miller and Kailey Leinz in New York. And from where I am here in Europe, Kailey, of course, we're still focused on everything that's happening day in, day out, day 5, day 4, day 5, day 6 into the Ukrainian invasion. Markets in amongst all of that losing their footing.
Yeah, at least they've rolled over in Western markets, Anna. It actually was still a pretty positive session in Asia overnight. Broadly, the MSCI Asia Pacific Index was up by about 0.6%. One of the outperformers within that was actually Japanese equities, the Nikkei 225, higher by more than 1 full percentage point. What's interesting is that may have been aided by what was a weaker Japanese yen earlier in the session, but as that FX session has grown older, as things have gotten more risk off in Western markets, you're starting to see that haven bid coming back into the yen. It is now stronger against the U.S. dollar by around 0.2%. We are just south of 115, 114.79 is where we trade at the moment. The other factor I wanted to point out was the PMI data we got out of China. Those manufacturing PMIs for February coming in stronger than expected. That raises the probability of better demand for iron ore. And as a result, you saw iron ore futures in Singapore up about 5 percentage points, Matt. They are trading just underneath that $150 a ton level.
Yeah, big bid for commodities today. Futures are down this morning as we head towards the U.S. Open, off about 0.5%. We had gains at one point yesterday during the live cash session, but then closed down, of course, at the end of the day. There is a bid for the U.S. 10-year pushing the yield down to 1.8044. So investors looking for the safety of treasuries. Also, in some senses, the safety of oil. You can see NYMEX crude right now. This is Texas Intermediate at $99.04. So don't be confused. You're not looking at Brent. We're almost 100 here on the NYMEX. Bitcoin up 4% to 43,292. Again, the narrative continues to be, Anna, that Russians looking for any place to put their assets other than the ruble are going, at least in part, to digital currencies.
Yeah, and is there anything that Western governments can do about that? We will talk to a Treasury minister later on in the programme and ask just that. This is what we're seeing on European equity markets right now. These markets down in the south of Europe, they were actually in positive territory at the start of the trading day, but now we're down by 1.8% on the FTSE MIB, for example, over in Italy. It's a little bit of a copy of yesterday in terms of the sectors in focus. So defence stocks, they're moving to the upside on expectations of more spending on defence by European governments. We also see some of the gambling companies moving a little lower. Exposure to Russia appears to be one of the themes that the market is trading on there. Let me show you some of the other assets in focus today. We've got the basic resources sector pulled out here, up by 0.4%. This remains one of the bright spots, one of the only sectors in in Europe that is in positive territory. Many of them listed in London, but not all London miners are moving higher. Polymetal, for example, a Russian mining business, also has a listed in London. It was down heavily yesterday, down 80% year to date for that kind of business. Brent crude is here then, Matt. You talked about where we were on the WTI price. We're at 102.21 on Brent crude, 4.3% to the upside. If that's confusing, that's because we saw a big drop in those oil prices in the latter part of yesterday's trading day. So even that upside only takes us to 102. And the big story here really is what we're going to hear from OPEC middle of the week and what we're going to see from Western governments in terms of that strategic petroleum reserve, what kind of release there. I put in here, this is the Bloomberg Agricultural Index. And so this is tracking agricultural prices. This is another theme we need to not lose sight of as we talk a lot about these kinds of commodities, oil and gas, not losing sight of this. How much are wheat exports going to be disrupted, of course, from Russia and from Ukraine, and who stands to pick up some of that market? And here we have the Russian ruble. I put this in here because 3.7% is not a big move in recent history. But of course, we're seeing a disconnect between what is going on the offshore market. This, I think, is the offshore ruble, and what's going on onshore. We've seen capital controls, of course, introduced, Kailey, and that is a factor. And as you see that taking hold, you then get that divergence in how the ruble trades in different parts of the world.
Yeah, very, very thin liquidity. Those bid-ask spreads quite wide. Anna, we will continue to watch the ruble throughout today's session. And as for what else we will be watching in the day ahead, Atlanta Fed President Raphael Bostic will take part in a moderated virtual discussion at 2 p.m. New York time. Traders, of course, will be looking for clues on the size of this month's expected rate hike. Then OPEC Plus will be meeting via video conference to discuss Ukraine-Russia risks and progress toward a renewed Iran nuclear deal. We were just getting headlines out of OPEC that it sees a smaller oil surplus this year than previously expected. On the U.S. economic and corporate earnings front, we will get U.S. retail earnings from Target, Nordstrom, and Kroger. And then finally, the big event tonight, President Joe Biden will make his first State of the Union address at 9 p.m. New York time. You can bet, Matt, that Russia and Ukraine are going to be front and center of that agenda.
Yeah, absolutely. He will also talk about inflation on the domestic front. But of course, the Russian shelling of Ukraine has escalated overnight. Troops on the ground are moving slowly in a large convoy, and I mean large, towards the capital, Kiev. We've heard reports that it's a 40-mile convoy. Interfax says Russian armed forces will continue their military operation in Ukraine, the attack, until they meet their goals. For more, we're joined by Rosalind Matheson, Bloomberg International Government Executive Editor. Roz, what are the goals? I mean, do they simply want to install a pro-Moscow government? I mean, that's not even a simple task. What is this military operation aiming to achieve?
Well, from the outset, the Russian president has said that he wants to make sure that Ukraine becomes much more of a neutral country, and that for him seems to be regime change. He really wants the government that's in there now, and he wants the Ukraine military, rather, to come much more under Russian control. So does that extend to Ukraine essentially becoming part of Russia? Does it become governed by a pro-Russian administration? Does he carve up Ukraine in some fashion? Because certainly, at least in Western Ukraine, they're very pro-European, more so than that. So his ultimate goals are still some version of that, despite the fact that he's entertaining talks that have occurred on the Belarus border in recent days. He really just wants to see total control by Russia come onto Ukraine either way.
And so do we have low expectations for what any of these talks can achieve then, Rosalind? Because at the same time, we see the presidents of 8 Eastern European countries, EU members, sending an open letter to the bloc calling for it to immediately grant an accession path to Ukraine. So Ukraine's still trying to join the EU at the same time as President Putin sees a very different path for the country. It doesn't seem likely that talks can result in a compromise if that's the opening positions.
Well, that's right, and the differences between them are just too enormous to see any kind of pathway to an agreement. There were those talks that occurred, but now they've returned to their capitals to consider whether and when they want to go back for a further round. But meanwhile, this conflict continues unabated on the ground. And as you say, for Ukraine, it's really a question of them wanting to be much more in the embrace of Europe, be it the European Union or NATO, whatever. And that's just something that the Russian president won't tolerate. So what common ground you can find between those two positions is very difficult to see at this point in time.
Rosalind, thank you very much. Rosalind Matheson, Bloomberg International Government Executive Editor. Now, let's talk about what's coming up in the Washington agenda today. Meanwhile, in Washington, Democratic Senator Joe Manchin wants the Biden administration to encourage more domestic energy production. Manchin says it's ridiculous that the U.S. buys oil from Russia, and he's planning weeks of hearings on energy independence. Emily Wilkins, Bloomberg government reporter, joins us now from D.C. How much backing will he get for this kind of call, then, Emily?
Well, let's remember here that even though we do treat Senator Joe Manchin like a second president here around Washington just because of the power he holds in this 50-50 Senate, he is in fact the chairman of the House Natural Resources Committee, which gives him a good amount of power in what hearings are going to be held, what topics are going to be explored, what legislation is going to be brought up. So this is an area where Manchin does have, even more than usual, a good bit of power. And we are seeing that this coincides with calls that the U.S. and other countries do have a plan to release 60 million barrels of oil from their strategic reserves. That could be about 30 million barrels from the U.S. That is, of course, in response to both rising gas prices as well as how that's going to be impacted by the Russian invasion on Ukraine. I mean, at this point, the Biden administration has tried to not really hit Russia's energy sector, but you are hearing from some lawmakers, including Manchin, that they think that is something that the Biden administration should be looking into because they believe it will really deliver a lot of pain to Russia's economy.
So, Emily, when President Biden addresses Congress and the nation tonight, how does he walk the line between toughness on Russia as it comes to Ukraine and the inflationary pressures that Americans are feeling at the gas pump?
So it's going to be a bit of a long speech. It normally is. And so we know that Biden's going to hit on a number of different topics. He's certainly going to be talking about Ukraine, about what he sees as the bravery of Ukrainian citizens, as well as the need for the U.S. to protect democracy abroad. But of course, he does have to address those domestic policies, not just inflation, but also and rising prices, but also talking a little bit about his legislation. Now, we've heard from some lawmakers who are hoping that he pushes components of that so-called Build Back Better bill. Lawmakers say they want to discuss things such as healthcare, such as climate. And a lot of this comes into framing. We know that President Biden from the White House is going to be trying to talk about climate in terms of what that saves for American families, not just in terms of needing to go green, but in terms of needing to really help stimulate the economy.
Emily, thank you. Emily Wilkins of Bloomberg Government. And don't miss our coverage of President Biden's State of the Union address. That starts at 8:30 p.m. in New York, 1:30 a.m. in London. Now, JP Morgan CEO Jamie Dimon weighed in on the SWIFT sanctions on Russia in an exclusive interview with Bloomberg.
War doesn't always follow the path you want. I think people are worried. I think they're more worried about SWIFT about the unintended consequences. What countries do you hurt? What people are going to do workarounds? How you fix that in the case you shouldn't. Remember, the government itself wants to have an open conduit, it looks like, for energy payments. So there are a whole bunch of issues they got to work through.
Jamie Dimon there talking about unintended consequences. Meanwhile, one consequence of the invasion of Ukraine is foreign firms exiting Russia. This reverses 3 decades of investment that followed the 1991 collapse of the Soviet Union. Let's get more with Bloomberg's Danny Berger. And Danny, the list just keeps getting longer.
It does. It gets longer. It expands to different industries. It really is this self-regulation of fear of financial risks and reputational risks. So you have everyone from car makers and motor makers like Harley-Davidson, Daimler, halting operation businesses in the country. You heard from A.P. Moller-Maersk, one of the biggest shipping companies, just an hour or so ago saying that they would stop taking new bookings from Russia. It's this fear of safety and any sort of stability going through the region. Now, oil and gas is a really fascinating one. We also had Total today saying that they wouldn't have new investments in Russia. There's still no news on a large stake they have in a Russian oil and gas company. But elsewhere, we've seen Shell, for example, BP was one of the first saying that they wouldn't continue on. They'd get rid of these assets. Now, banking is also the other sector to watch when it comes how companies operate. Even though there's this carve out for gas, for oil, when it comes to Russia, you still have banks who are uncertain with how to operate there. There's a lot of unknowns. So Credit Suisse and SocGen, both of them have stopped the funding for commodities trading when it comes to Russia, oil and gas. ING and Rabobank, both of them have restricted lending in the Russian oil and gas space. So again, even though there aren't direct sanctions, Matt, it is this unknowingness. Will there be more sanctions? And just trying to figure out how business operates, again, with a lot of Russian banks cut off from the SWIFT messaging system.
You know what? I have so many questions on this story, like who's going to buy these stakes, right? Nobody wants to buy Russian assets right now. Who's going to sell them? You can't just take a multi-million-dollar stake outside and sell it to your neighbor, right? You need an intermediary, and no one's going to do that. And then also, why do we keep saying Daimler? They changed their name officially on February 1st to Mercedes-Benz Group, but everyone continues to say Daimler. Absolutely. Listen, in terms of Bitcoin, this is where it gets even more complicated because a lot of Russians you know, maybe trying to turn ruble into digital currency. And now the U.S. has asked at least some Bitcoin exchanges to try and stop those transactions.
Yeah, and I should say Vice reporting that Binance, one of the exchanges, saying that it goes against really what crypto was created for, to block access from anyone from crypto itself. But that idea, Matt, has meant that Bitcoin has gained 10.5% over the past 2 days. That perhaps it's not just Russians, but perhaps those in Ukraine who are having difficulty accessing traditional banking might be going into crypto. So this is the best 2-day rally since October. But one thing to keep in mind with crypto is because it's so sentiment driven, it's a chicken or egg sort of thing. Is this actually happening in Russia or Ukraine, or is it just the speculation of that is helping to boost Bitcoin higher?
All right, Bloomberg's Danny Berger, thank you so much. And that move in Bitcoin is boosting crypto-related stocks in pre-market trading here in the U.S., but there are a number of other stocks moving to the downside. Lucid Motors is one of them. This is, of course, the EV maker. It cut its production outlook for the year thanks to what it's calling extraordinary supply chain pressures, commodity costs as well, weighing heavily on that company. That stock is down nearly 13 percentage points in early hours. Another stock moving to the downside is Novavax, of course, the COVID-19 vaccine maker. It reported after the bell a loss more than double what analysts were expecting. So that outshining or outweighing some of the better vaccine efficacy data. That stock is down more than 7% before the bell. And finally, also moving to the downside is Zoom Video, what we all have been using all pandemic, but their sales growth forecast for the current quarter came up short, raises questions about what the post-pandemic future looks like for Zoom. That stock down the better part of 5 percentage points before the bell, Anna.
Yeah, I feel like it's almost become a verb, Kailey, but that not protecting the stock from the downside. Right, coming up on this program, we will assess the market impacts of the war in Ukraine with Viraj Patel, global macro strategist at Vanda Research. We'll get his perspective on what this does to FX markets. FX markets seeing some dollar strength this morning as risk aversion takes center stage once again. And in a preview of Biden's State of the Union address, we will talk to Julie Norman, co-director of the UCL Center on U.S. Politics. Plus, UK Economic Secretary to the Treasury, Glen will join us. We'll ask how welcome Russian entities are in London now. This is Bloomberg.
Of course, the Moscow Stock Exchange is closed. It closed on Monday. It's going to be closed until March the 5th. So Russia, Belarus is uninvestable, clearly, at this point. It's not a time to panic. It's a time for calm heads, of course. And what we're seeing in the market is there's a flight to quality. There's actually a flight to scarcity. Think about energy. Think about food supplies.
CEO of Aberdeen there, Stephen Bird, speaking earlier on Bloomberg Television. Joining us now is Christine Aquino, who helps lead our markets coverage. And Christine, you know, we're hearing so much about Russian asset sales today, but there's no one there to do the sales or to buy the assets. We're seeing headlines like Russian markets are looking uninvestable. Aren't they already pretty uninvestable?
Well, Matt, that's definitely what we're hearing on the ground, and you're absolutely right. There's a lot of interest to offload Russian assets, but there's no one on the other end that's really willing to buy them. But that's really interesting, though, because, you know, now we're kind of seeing investors coming out and saying Russia is uninvestable, but just a mere 8 weeks ago, closer to the start of this year, Russia was still being hailed as one of the investors' favorite destinations, particularly in emerging markets, I think primarily because of its ability to get ahead of that inflation story with its multiple rate hikes that we saw in the past year. But how quickly things have changed.
Yeah, how quickly things have changed, and people perhaps wanted some of that higher upside to oil prices exposure. Well, now we see that, but that's not the whole Russia story, as we know. What about other commodities then, Christine? I was looking earlier at the Bloomberg Agricultural Sub-Index, up at 2014 lows, so creeping up there, or in fact jumping up there. And I was talking to one guest who was telling me, look, this is pushing the Australian dollar up, and other countries that rival for wheat exports. I mean, this is having an impact globally.
Absolutely, Anna. And I think this will be the next installment in this whole saga. What really this means for very important commodities, not just oil and gas, but food. You know, this is something I think that's less kind of getting less focused because of everything that's happening. But it is a very important topic. Again, reminder that Ukraine is the breadbasket of the world, and any potential disruption to supply from that country is definitely going to create a lot of food anxiety.
Yeah, certainly talking about grains. Christine, thank you very much. Bloomberg, Christine Aquino. For the latest market analysis, check out MLIV Go. That is the function to use on your terminal. This is Bloomberg.
Now keeping you up to date with news from around the world, here's the first word. China's economy gained momentum in February and assigned pro-growth policies have started to kick in. The official Purchasing Managers Index rose above the 50 level, the line that separates expansion from contraction. New orders placed at Chinese manufacturers picked up. And in Hong Kong, there will reportedly be a lockdown to ensure a mandatory coronavirus testing drive this month is effective. That's according to local news media. Reports say officials will test the whole city 3 times over 9 days. In the last few weeks, the number of COVID cases in Hong Kong has ballooned from a few hundred a day to more than 34,000 on Monday. But of course, it is no longer the pandemic that is capturing the focus of the markets. It is instead the geopolitical tensions at play between Russia and Ukraine. We'll talk about the market impact, the macroeconomic impact with Viraj Patel, global macro strategist at Vanda Research. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Russia stepped up shelling of key cities in Ukraine overnight. The mayor of the country's second largest city, Kharkiv, says residential areas are being bombed. Meanwhile, Russian ground troops were slowly moving in a large convoy toward the Ukrainian capital, Kyiv. Interfax reports that Russian armed forces will continue their, quote, military operation in Ukraine until they meet their goals. The White House had to shift gears for President Biden's State of the Union address tonight. The president will now highlight the Russian invasion of Ukraine and what he calls nuclear saber-rattling by Vladimir Putin. Originally, the president was going to focus on the improving coronavirus outlook and rebrand his domestic policy priorities. And foreign companies from Shell to Daimler Trucks are abandoning Russia. That's reversing 3 decades of investment by businesses since the collapse of the Soviet Union in 1991. Some Western companies have concluded that the risks, both reputational and maybe financial, are just too great to continue. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. We continue to focus on the situation on the ground, the fighting itself, and the flow of refugees. Matt, that's the focus for us geopolitically, of course. In terms of where the markets are right now, we saw European markets losing their footing very early on in the session this morning.
Yeah, and we saw, U.S. markets close down yesterday in the cash trade. Not a huge drop, I think about 0.25% for the S&P 500, but we do see futures down again today and getting worse over the last half hour, so now down 0.8%. Investors are piling into treasuries, buying U.S. government bonds, pushing the yield down right now, 175.31, and it was 180 when we started the show 30 minutes ago. NYMEX crude trading at about $99 a barrel still. This is West Texas Intermediate, 98.67. Brent is still up well over $100 a barrel, so there's real concern about supplies there as everyone kind of stocks up, including Europeans who continue to buy oil and gas from Russia at these elevated prices. And Bitcoin up 3.5%, 43,145. The narrative is, or the idea is, that Russians may be wanting to trade rubles for digital currencies the same way that countries, the people in countries that have suffered hyperinflation have done in the past. I'm not sure if that's exactly what's happening. Maybe people just think it's going to happen and are buying it ahead of the trade. But that's what we see in terms of the move, for sure, Bitcoin getting pricier. What do you see in terms of pre-market moves, Kailey?
Well, this is tied to the fact that Bitcoin is moving higher. A lot of crypto-related stocks are also getting a little bit of a lift here in early hours. The likes of Marathon Digital and Riot Blockchain, they're up about 3% and 2% respectively. There's a lot of movers to the downside, though, and it's not just about the macro picture. It's also some micro idiosyncratic stories, like with Lucid Motors, the EV maker. It cut its production forecast for the year, citing extraordinary pressures on the supply chain and logistics. That stock is down more than 13%. And you also have Zoom Video moving to the downside. The post-pandemic future is really what is in question here as their first quarter sales guidance comes up short. So that stock is down about 4.5% before the bell, Anna.
Yeah, so that's the situation over in the United States. Here in Europe, Kailey, we have European equity markets moving to the downside. I've got the US board here, but when we show you the European board, there we go. Stocks Europe 600 at 1.8% to the downside. So the losses here in Europe really ramping up as we go through this morning's session. This is the basic resources sector. Fairly flat, actually, now. It was one area of brightness, if you like, just one sector that was in positive territory earlier on. Matt, you were talking about what we're seeing on the Treasury markets and how quickly we're seeing those those yields drop. Well, interesting to keep an eye on what's going on the German Bund, the 10-year. Will it go negative again? It seems just not all that long ago we were highlighting how those yield stories were moving to the upside. We're getting out of negative territory on German Bunds, but now it looks as if we could be heading back into negative. We'll keep an eye on that. The Brent price, 101.50, up 3.6%. The big question here is around strategic petroleum reserves. What kind of release will we get? How coordinated across Western markets? What will OPEC do this week? OPEC Plus, in fact, including Russia in the mix, interestingly. This is the ruble. We see a disconnect now between what's going on the onshore ruble and the offshore ruble, this perhaps the offshore market, but we are seeing a little bit more calmness than compared to yesterday, but still these two disconnecting as Russia imposes capital controls, Kailey.
And of course, it's all in a consequence of Russia's invasion of Ukraine, and it too is changing the outlook on inflation and the Fed. Man Group CEO Luke Ellis weighed in earlier.
I think that the very clear thing is that this is inflationary. It's probably stagflationary. It depends which economy you're in. But, you know, if you look at the US, it's clearly inflationary. It's inflationary on the energy side. It's inflationary, particularly on the agricultural side. And I don't think the Fed is able to step back very much. Maybe they'll do 25 rather than 50 this first time. But they're going to have to keep raising rates and raise them materially. They're going to have to get on with QT. And I think the bond market is really not reflecting that today.
Let's talk more about this. Viraj Patel, global macro strategist at Vanda Research, is joining us now. He is on set with Matt and I here in New York, which is very exciting. Viraj, when you hear those comments from Luke Ellis, I want to contrast them with what we heard from Marko Kolanovic over at JP Morgan, who essentially said that the crisis in Ukraine means the Fed is going to have to be less aggressive. Where do you come down in terms of what the geopolitical situation means for the trajectory of monetary policy?
Yeah, this trade-off between geopolitics and inflation is wreaking havoc across markets. Really, investors are, and including ourselves, are really trying to understand which side of this growth inflation coin will central banks land on. Now, look, I think the policy responses will end up being probably different in what you see in the US versus Europe. Europe, the narrative is stagflation. We think that's fairly crowded now. You know, the real risk is this: does this stagflation turn into deflation? You know, that negative growth shock coming through. We're going to hear the ECB talking about this next week. They've modeled the scenarios. That worst case scenario could be potentially, damaging to the Eurozone economy. So the only way to think about this is through the prism of financial conditions. And so in that sense, the ECB tightening rates here would be exacerbating some of the financial stress that's happening in European financial markets. So, we think that trade, being dovish on the ECB, waiting, playing that wait and see game around rate hikes, for us makes much sense. We've been doves for the start of the year. This is just another reason for that.
What about the Fed? I mean, the financial conditions picture has worsened materially. You can see it on the Bloomberg with FCON Go. Is the Fed still going to go through with a rate hike in March, maybe even a rate hike at most of the meetings through the end of the year?
Most likely in terms of March. I think that's probably clear. Definitely a couple of front-loaded. The difference really is the breadth of inflation in the US. This is another tipping point that takes the energy into sort of broader base. You've got stronger evidence of your second round effects in the US spilling through into the rest of the basket. That's not happening in Europe. Certainly, in what we look at, there's no evidence of a wage price spiral. There's no real clear evidence of second round effects. Yes, the only component in Europe is the supply shock. So, I think there's going to be a difference of responses here, and the Fed, has ammunition to really get a couple of hikes done this year.
Viraj, good morning from London. I mean, how low does this keep yields then? Matt was just talking about the deterioration or the drop we've seen in yields in the last half hour or so in markets, and I was talking about whether we go negative on German 10 years. How low does this keep? How in check does this keep those yields?
Positioning in the bond market has been very one-sided. Let's take the bunds, for example. We've seen a massive build-up of shorts over the past couple of months, really playing this whole, ECB tightening story, inflation story. These shorts look massively offside now. So, last week we saw the biggest weekly build in long positions in the bond market. We hadn't seen that since May 21, and we recall what we saw last summer. The sort of Delta playbook, a real dovish repricing, yields grinding lower. I really think that could happen in the European bond market now.
Well, and obviously that's part of a broader haven trade we have seen. Where can you still find safety that's not crowded?
Yeah, I think, the FX space is really interesting. Obviously, the dollar is going to be, the haven in a financial crisis. But there are probably better havens out there, like the yen and the Swiss franc. If this, as I said, geopolitical crisis deepens, this is not.
They just seemed to pick it up yesterday. They didn't get a bid.
And I think that's partly because of the financial element. But if we see broader cross-border repatriation flows, over a sustained period of couple of months, because this this crisis isn't going to go away in a week, right? Like if this could happen for months, quarters, years. So, that's the trade for us, we think, in the FX space. The other trade has really just been long energy exporters versus short energy importers. We would avoid European currencies at all costs in this because, this is a negative supply shock on par, if not worse, than what we saw with Brexit and the pound. So, basically avoiding European currencies.
Wow.
We see the euro weaker again this morning. Viraj Patel of Vanda Research, thank you very much for joining us. And of course, Eastern European currencies also being hit more so in a number of cases. Now, coming up on this programme, UK Economic Secretary to the Treasury, Glen, will talk about the sanctions environment that's been put in place around Russia by the UK in conjunction with allies, of course. But what is the UK exactly doing here? And Julie Norman, co-director of the UCL Centre on US Politics, will talk about the State of the Union address. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Target CFO Michael Fidelki. That's at 7:30 a.m. in New York, 12:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards in London. Now, Russia says it will continue its military operation, that's another word for its attack, in Ukraine until its goals are met, as its troops move slowly in a very large convoy towards the capital, Kiev. Let's get the latest with our European correspondent, Maria Tadeo, who joins us out of Warsaw. And Maria, what do we know, first of all, about the force? The BBC has reported it's a 40-mile-long convoy that Russia is moving into Ukraine. As you know, the Europeans are giving Ukraine, I think, $450 million worth of assistance, whereas the Russians sell $4.4 billion of oil and gas a day.
Yeah, but remember, Matt, this facility that the European Union has put on place is the beginning of it. Just 3 days ago, the European Union said that they weren't going to supply weapons to Ukraine. They're now doing it. And in fact, my contact in Brussels suggesting the severity, the brutality of the attack that we saw yesterday is probably going to change the conversation in Brussels as to what do we sanction next and how do we go bigger on this. And one of the leading figures in this is, of course, the Polish Prime Minister Morawiecki, who has been incredibly hardline on the Russians, saying we're Eastern Europeans, we know how the Russians operate, please listen to us. Today he's going to be speaking with Boris Johnson here in Warsaw, where we are, and then he's going to Brussels to speak with Ursula von der Leyen. I guess a lot of this will have to do with what is the next stage here. It is clear that, at least for the time being, the actions taken by the United States, the European Union, but also the UK, which has been pretty active on this, I should note, too, are not serving as a deterrent. I also had another source telling me yesterday from Ukraine that this was, in his view, and this is his real life firsthand experience, that yesterday was the toughest night. What we're seeing as these attacks are going incrementally bigger, and that is now an incredibly concerning for the Europeans, especially when you look that civilian lives are, of course, on the line now. This is not just military points at this point.
And we know that you're there in Poland, Maria, and we know that 377,400 people have crossed from Ukraine into Poland just since last Thursday. And that is just on that particular border crossing between Ukraine and Poland. Of course, some going to other European countries as well. Maria, thank you very much for the update. Maria Tadeo with us there from Warsaw. So in response to Russia's invasion of Ukraine, the UK government has introduced sanctions along with Western allies. In its latest move today, the UK government will present its economic crimes bill to Parliament. The aim is to crack down on foreign money laundering that uses the UK property market. I'm pleased to say Glen, UK Economic Secretary to the Treasury, joins us now. Very good to have you with us today to talk about this. I wonder if you're concerned at all that we will just see innovation to the fore and those with something to hide might continue to innovate to keep their identities hidden, and you won't be able to maybe get a firm handle on who owns what in the UK property market.
Well, they can try, but what we've done is, from the start, taken a very strong and uncompromising position. This is the largest set of sanctions ever issued against a major country, and we're determined to make it as effective and as broad as possible. So the announcements we've made on the register of overseas entities and the beneficial ownership of those entities is something that we're taking through Parliament urgently, and we will be looking at all ways to ensure that it can't be something that individuals or entities can get around.
I think that something in this document suggests that maybe you'll have the powers to seize crypto assets. So is this something that the Treasury is concerned about, that some Russians might try to get around sanctions by using crypto assets? What exactly can you do on that front?
Well, throughout, we've been working across the G7 with the US and with our friends in Europe and the Western world to make sure that these interventions are as comprehensive as possible. And that will involve looking at asset classes across the economy. And we've put a range of measures in already, and we will continue to work with our allies to make sure that they're effective across other methods that people may try and use. So we will continue to intensify our efforts, as the Prime Minister said in Poland just an hour ago, as we work in a coordinated way to make sure there's nowhere that these individuals and entities can hide.
Mr. Secretary, I was just talking with our reporter on the ground in Warsaw, Maria Tadeo, about the amount of aid, weapons aid, being given from the EU to Ukraine. It seems incredibly small, denominated in millions rather than billions, especially considering the fact that we give Vladimir Putin billions of dollars a week for his oil and gas exports. In fact, it amounts to about $230 billion last year, and that number is going to be much higher now at these prices. Is it all right to continue buying things from Vladimir Putin, financing, in effect, his war effort?
Well, I think the measures we've taken in terms of shutting major Russian banks out of the banking system, putting significant restrictions on the way that the Russian central bank reserves can be used and the way they can interact. Look, we've seen the enormous impact on the stock market, massive fall in stock values. We've seen the impact on the value of the ruble. We've seen unprecedented falls in the state of the economy, doubling of interest rates to 20% in Russia. I don't think these interventions are insignificant. Of course, there are significant challenges with energy. Those things can't be changed overnight, but I think the determination and the range of interventions that the British government has put up with its allies has been considerable, and the impact has been felt in those measures that I've mentioned.
Mr. Secretary, you mentioned the sanctions on Russian banks. Do you see a future for Russian banks, the likes of VTB in London?
Well, at the moment, these major Russian banks are being frozen out of the norms of international banking behaviours. Their routes to market are restricted, and this is a direct consequence of the unprovoked intervention they've taken in Ukraine. I can't speak to where we will end up on this, but we are determined that the Russian government, the Russian economy will feel the effects of the decisions that President Putin has taken in Ukraine.
And are you happy for shares of Russian entities, Secretary, to continue to be traded in London? Because you'll know that a number of Russian businesses, of course, have listings in Russia. They're not able to trade right now, but they're trading in London. Is that something that you see continuing?
Well, we continue to work with our allies across the globe to look at the appropriate interventions, and the intensification of those interventions is something that we're committed to as this crisis develops. We don't take anything off the table, but obviously we also look at the effects and what behaviours will ensue from whatever decisions we make. We've got to make sure that we make those decisions, as we did with SWIFT, in alignment with our allies, and particularly in the US and Europe, to make sure that they're effective, and we will continue to have those conversations at that global level.
All right, John Glen, UK Economic Secretary to the Treasury, thank you so much for sharing some of your time with us this morning. Meanwhile, on this side of the Atlantic, President Biden heads to his first State of the Union address with one global crisis, the pandemic, fading, and another, Russia's invasion of Ukraine, escalating. Joining us now is Julie Norman, lecturer in politics and international relations at University College London. Julie, we were just talking with the secretary there about the options still on the table. And for now, the Biden administration has left energy-related sanctions on the table, but has not yet made that move. Do you think they can or will do so in the face of inflationary pressures faced by the domestic public?
Well, as we heard, it's still definitely an option, but the priority for the Biden administration throughout this entire crisis has been working in very close unity and concert with European allies. And Biden is very realistic that Europe and Germany in particular will be the one to feel that rise of energy prices rising even quicker than Americans will. Obviously, it will affect the American market as well. But Biden is also, again, trying to coordinate between multiple countries with multiple energy interests on this. With that said, he has been really pushing for increased aid to Ukraine this week. They're trying to get a $6 billion package through the Senate that will most likely go through by next week. And so the U.S. right now, I think, is trying to see what can we do with sanctions, but what can we also do in terms of getting more military aid directly to Ukraine.
Can President Biden profit off of a more aggressive stance here? I mean, it's no secret that his approval rating has been incredibly low. He was hit hard by the way the U.S. pulled out of Afghanistan, and inflation has been, a constant thorn in his side. So doesn't he need to take a really aggressive stance against Russia here?
He does need to come out and show his leadership here, Matt. You're absolutely right. And the State of the Union is often a time when the president kind of touts his accomplishments. But in this State of the Union, I think Biden's going to need to kind of walk a fine line between highlighting what he's done, but also really recognizing concerns around inflation, most notably, but also this question of global instability and how that will affect inflation. We know that from recent polls, about 6 in 10 Americans are already feeling the effects of inflation, about 3 in 10 in very significant and hard-hitting ways. So Biden really needs to be direct with the country in terms of recognizing that he understands this, but also being very clear in what he plans to do about it, especially knowing that the crisis in Ukraine will likely increase those prices. So it's a tough position for Biden to be with already low approval ratings.
Yeah, I don't know if only 6 out of 10 Americans have felt the effects of inflation. I don't know what the other 4 are doing. I mean, maybe they're, children under the age of 10. Because everyone else is feeling it here. How hard does this administration have to fight against it?
Well, it's clearly the #1 issue against Biden right now. It's a tough issue for him to be having going into a midterm year in particular. And as you said, it's something that most Americans feel in some way, shape, or form. Definitely at the gas pump, definitely in terms of buying food, groceries, kind of basic necessities. And it's especially felt by those kind of under the $50,000 income mark, so working class Americans in particular. So again, the administration has not had great messaging on this until now. I think the State of the Union presents an opportunity for Biden to reset how the administration is going to tackle this with a little bit more transparency and be a little bit more clear-eyed about the impacts.
Julie, nobody wants war, but wars can throw up opportunities for bipartisan cooperation that might have been more difficult to achieve otherwise. Any sense that these kinds of geopolitical developments open up avenues that may have previously been closed?
Well, and it does in many ways. And we have heard some statements from Trump and some of his supporters that are very contrary to what we're hearing from Biden and most congressional representatives on the Hill. But in last night's meeting between the Ukrainian ambassador and senators, there was definitely bipartisan support there, again, about trying to support Ukraine, trying to figure out what sanctions were going to be best, and again, really trying to ensure that the U.S. was a leader in getting that military and also humanitarian aid to Ukraine as soon as possible. So I do think we'll see a bit more unity on that issue than we do in most in U.S. politics.
All right, thanks so much for joining us, Julie Norman, lecturer in politics and international relations at UCL. Always appreciate your time. And of course, you can stay with Bloomberg for our coverage of tonight's State of the Union address, followed by the Republican response. That starts tonight at 8:30 p.m. in New York, 1:30 a.m. in London. And while we'll all be watching that, of course, we also have to continue to watch the headlines crossing on Ukraine and Russia and the market response. Matt, am focused on oil once again. Brent back above $101 a barrel. WTI dancing around that $99 level, even as we have talk of Biden and the U.S. potentially with other countries coordinating another SPR reserve release.
Yeah, I'm constantly pulling up GLCO Go to see the oil prices as well. But I'm watching this massive convoy marching into Kiev right now. If it's an over 40-mile column, that just means it's an incredible amount of force ready to rain down on the capital city. And I wonder, what that means for Vitaly Klitschko. I wonder what that means for Zelensky. I wonder what that means for the people of Kiev and Ukraine. And it's incredibly concerning.
Yeah, absolutely. And we continue to watch the images of that, and also the flow of people moving towards the borders, crossing the borders into Warsaw, into Poland and the like. From a corporate perspective, I'm really watching all the European corporates and their response here. We've heard from big oil in the UK, of course, and not just a little bit of political pressure, it would seem, being applied, at least meetings taking place between big oil and the UK government. Will we see that in France as well? We've heard from Le Maire. He's going to be speaking to the Total Energies management. So things are changing fast in what Western businesses are prepared to do in Russia still. More Bloomberg surveillance is ahead. This is Bloomberg.